Hi guys, hope you guys are good. So in today's video, what we'll be doing is a analysis based on what we're anticipating in tomorrow's trading. All right. So it's like a end of week outlook. All right. And the reason why this information will be important is because, well, firstly, it will help us to understand what we're seeing tomorrow, and then secondly, it will set a tone for us to understand what we can anticipate in next week's trading. All right. So if you watch this video and you happen to find it valuable, especially for the guys on YouTube, please do subscribe. But most importantly, please do subscribe to my TradingView profile as well so that you can get daily updates, right? So on Monday, and I will speak through why this is important. So on Monday, I released a weekly outlook video on TradingView as well as YouTube as well. And, essentially in the video, I was talking through what we can anticipate after we've reached into this order block. So 2 weeks ago, I spoke about how we'd be drawing into this order block, and then we'd either see the market pull back into a fair value gap, right? And the second option would be either the market consolidates, and then the third option would be either the market comes all the way down into the daily mitigation block. So three things. And on Monday, I saw the market draw. We drew into this daily fair value gap, right? And then I was anticipating that the market could continue to take the buy stops over there and then reach into our, long-term perspective being that point over there. And I released a video speaking on that. And yeah, so now what the trading view uh, does, like if you're following my profile, you start to see that I release each and every day, I release updates based on what we can anticipate in that week. So on Monday, I already saw evidence that there was, it wasn't likely that we'd continue, right, to the upside. In fact, I think I saw that on Tuesday that it wasn't likely to continue to the upside, but instead we'd see the dollar go all the way down as to take sell stops. All right. And all of this, and essentially you just having to follow me on TradingView, you'll be able to see, these updates. This is, for instance, Tuesday's update, where I was starting to see the opposite. So if you remember well, if you have seen Monday's video on GBPUSD, I was anticipating a bearish movement to the downside, and I did speak on the fact that there's a likelihood we might pull back to, this daily bearish order block. And I released this, and then of course, this was the idea that I was trading on Tuesday. So I do this for, so it was that. I was Tuesday. Yeah, that was Tuesday. This is Wednesday. This is today's price action where I was seeing a further draw to the upside, and we will talk through all of this. So you just having to follow me on my trading view, you get to see these updates. And what I tried to do as well for you guys on YouTube is you'll notice in Monday's video, under the comment section, there are about 4 comments. I try to attach these links so that you guys can see what I'm anticipating on, that specific day, right? So, yeah, so like I said, if you find it valuable, please do subscribe. But let's get into it, right? Um, Monday, I released an extensive video just on the dollar on why we would be drawing to this point, how it's one of our long-term perspectives, right? I did talk through how once we've hit this order block, we then want to see the market either pull back to a fair value gap. It did that, but now we've received a market structure shift, indicating the likelihood that we might just pull back into this mitigation block. All right. There is a possibility that this is just a consolidation and we continue the market, right? And smart money is just actively taking sell stops and buying against those to draw the market higher. So there is a possibility that we could be seeing that. But one of the things that I'm looking forward to is the fact that I'd like to see the market draw all the way down there. So it's one of my possibilities, and I'm leaning more towards that. All right. So to give you guys an understanding of what a mitigation block is, I did speak on what it is on Monday, but we might as well speak on that now, as to give you guys an understanding of why this is a very important point of reference. So how a mitigation block works is we've seen that at some point we were bullish, the market reached this external range liquidity, the buy stops. And what we understand is smart money is going to order pair against those buy stops, meaning they're just going to sell, right? They're going to sell into their order against these buy stops. And that drove the market lower. So what we're looking at is this last bullish candle. We understand that at that point, that's where smart money was actively entering selling orders, right? And that resulted in the move lower, which pulled back into the breaker as well as this weekly fair value gap. Now, the breaker and the mitigation block basically work the same way. So when they sell this off, they draw the market into the breaker. At some point here, they entered sell orders off of this candle, which resulted in that move to the downside. So when price comes back here, they mitigate those sell orders and basically initiate new buying orders off of that point. So that's exactly how a mitigation block works as well. Off of this point, they're selling orders. The moment they buy at this point, the market, of course, trades to the upside. The orders that they had initiated here as sell orders are now in loss. So, there's a likelihood that smart money will then draw the market lower, bring it back to this point, and mitigate those sell orders and reinstate new buying orders. So it's basically this area is basically buyer's remorse. All right. So there is a likelihood that it could draw there. Mind you, like I said, likelihood. All right. And this is essentially, when you look at support and resistance traders, this is essentially what they're trading, right? These points over here that they would regard as a point of support. Once broken, it becomes support. Those are the points that is basically buyer's remorse, right? It's basically the mitigation block. So the correct way to mark these support zones, the correct way meaning the way an institutional, because you're regarding this as institutional price action or as an institutional support zone, it would be the mitigation block. So essentially, all of these support zones that support and resistance traders look into are basically mitigation blocks. Price at some point just comes back to mitigate uh, the orders that smart money had taken as a sell order. So it pushes above it. That sell order is now in loss. They bring it back here and they like I said, mitigate, and then they reinstate new buying orders. So it's very simple. So that's why this is a very important point that we're looking into. And okay, let's see what happened, right? We see that the market at some point gave us the market structure shift there, takes the sell stops, which is the external range liquidity. We then want to see the market draw towards internal range liquidity, in which in this instance we see that in form of the bearish order block as well as the daily fair value gap. So we've drawn into that. So today we basically draw into that fair value gap. So now we want to see the market draw in the opposite direction. So this is one of our points we'd like to see the market reach into, right? Just momentarily, but we have to understand that the main draw is bullish, has to reach those buy stops. But with that being said, let's look into the 4H. Okay, cool. So on the 4-hour time frame, what we start to see is, of course, smart money is actively pushing prices into premium and then selling as to reach into, sell stops, external range liquidity. We can see there's some type of a trend that's occurring over here in today's trading. At some point, we saw the market draw into that daily uh, bearish order block. And then today we drew as to take these sell stops. Then we see the market drawing all the way into extreme, uh, into the swing point where we see the market draw to the extreme as to take the buy stops. So this is essentially a false break of structure, and you can detect it before it happens. And I'll show you how to do that on the H1 time frame, right? So we see a false break of structure, which is also known as a turtle soup condition, and that's something we ICT traders like to trade, right? False breaks of structure. So this is just more confirmation that, price is actively going to be seeking, a draw towards the downside. And why is that occurring? All right. So if we look at these reference points, right, from this low to that high over there, we start to see that this is currently in premium prices. These are discount prices, right? So we understand if smart money is trying to draw the market all the way down here, what they're going to try and do is push the market into premium PDRAs, right? Such as you see here, there's a false break of structure. Buy stops were taken there, which implies that they sold at this point. Order pairing occurred over there. Same thing occurs over here. They only bringing the market further into premium prices. They see buy stops there to order pay against, to sell against, right? Or to distribute against. And essentially that's what's happening. And the simple logic is if you're selling in premium prices, it just makes sense for you to be taking profits in discount prices. And once you reach discount prices, you want to be accumulating long orders as to reach premium prices. So they've accumulated their short orders over there. So we see more evidence that price would likely draw into discount areas. And what we have in discount areas is essentially that mitigation block, right? And another thing as well, we see that we have discount sell stops. So once price reaches the mitigation block, mitigates the sell orders that were once distributed in there, mitigate those, they will reinstate new buying orders against these sell stops. So that's just more evidence in us having to see the market draw all the way down there. All right. So let's look into the H1 and confirm, see if there's more confirmation to see a bearish draw in our DXY. So we can see at some point, like we saw, price made a high, came back, took the sell stops, went further higher than that point, turtle soup condition. We see the market also, tap into that bearish order block, and a liquidity void is also filled as well. So how do we know that this is a turtle soup condition? So one of the ways to, you know, look into that is by looking at SMT divergence. All right. We want to see if there's any divergence that's, giving us an idea to either reverse or continue trend to the upside. And I do speak on this on SMT in one of my videos. You can just look through my video catalogs where I'm teaching ICT concepts. You'll see SMT divergence, the smart money tool, and it will explain everything. So we can't go necessarily into depth with this. But what I want you to notice or look at is this high over here and that high over there. And we want to mark those exactly, you know, exactly or correlate them exactly to this point. So we understand that if whatever pair you're looking at, as long as it's associated to the dollar, you will see some form of symmetry in the way they move because it's associated with the dollar. So it's not just the GBPUSD against DXY thing that you'll see. But now look, at some point the market on DXY pushed as to make that lower low. Then we see the market push higher against this high over here. Now, if it was symmetrical, we'd see the exact same thing over here. We'd want to see this low be established all the way down there for the market to continue. However, we see that it's not symmetrical. And what we learned that if it's a non-symmetrical market condition like it is now, you want to anticipate a reversal to occur over here. Hence, that's why we see the market drawing towards the downside. And essentially, over here, we're seeing in the DXY that, since the market didn't come all the way down here, smart money is actively trading. So once you see that there's no correlation or no symmetry, understand that smart money is actively trading. Only they have the power or the liquidity to do such a thing. So they actively accumulate to this point over here to push the market higher, right? So that's what we're anticipating on GBPUSD. So with that whole narrative, let's go into GBPUSD. Okay, cool. So on GBPUSD, what I'm seeing in price action is that we've taken these sell stops, and what we start to see here as we push above that high, we take buy stops, which is also a type of change in character where we're now seeing that price is momentarily bullish at the moment. And what I'm seeing it draw to is that weekly order block. You'll see it over here, right? And we also have this fair value gap alignment with it as well, right? So I'm seeing price having to draw all the way up there. There's a lot of confluence for price to reach there and then sell off at that point. And another thing as well, if you're just noting this last bearish candle over here, you want to see price draw into that because that's a breaker. So essentially you want to see price come back here and mitigate the orders that smart money had initiated to push the market higher. So you want to mitigate those orders and then continue or reinstate new selling orders, right? So there's a lot of confluence for the market to draw all the way up there. So with that being said, let's go into the H4. So on our H4 time frame, we start to see that at this point over here, we got a market structure shift, and all I've been seeing is for the market momentarily, you know, all I've been seeing it is delivering bullish wise, right? We see that price action now on the H4 in terms of just in in terms of just in institutional order flow, it's currently bullish. So I'd like to see the market draw towards these areas, those buy stops, and then eventually into that not the H4, but the weekly uh, bearish order block, and you'll see that smart money accumulated orders in a discount price, right, and continues to accumulate orders at these fair value gaps as to reach into premium prices where smart money will then actively look to book their orders, right? So we see a likelihood of price having to draw all the way up there. All right. And once we've reached there, we'll then look into whether we're seeing ideas of having to continue the sell move or potentially continue higher. But I am seeing uh, a bullish draw towards this point and then continuing to sell off, right? So let's go into the H1. So just on the H1 time frame, we see the market drew. Here's another false break of structure over here, total swoop condition to continue the market higher. What we start to see is we break structure over there, we pull back into a mitigation block. We continue higher. Today, we take the buy stops at that point, reach into a H1 bearish order block, and the reaction off of that was for the market to come back all the way down here, where I then saw new buying at this point to continue the market higher as to reach our first objective, being the buy stops over there. That's our second objective. And then thirdly, our last objective, well, for me personally, would be that weekly bearish order block, right? So I did take a trade off of this point, a buy order. And what I did do as well is, like I said, I do release, um, analysis on TradingView. And that's why I'm urging for you guys on YouTube to also subscribe to my TradingView platform. I will, on my profile, I will add a link in the what is it, the description, right? So that you can see all of these daily outlooks that I'm looking forward to, right? So I did see a pullback coming back into here, and then effectively after that, I was anticipating the buy move to the upside. And like I mentioned all the time, I am a day trader, so I did take this trade. And what I look for, so I did take the trade off of the H1 order block. I took a risk entry off of there, SL at the low, target 4R. Then I'm done for the day, right? So this is just to show you guys that I did take the trade, right? And I did do the analysis prior to, the market moving to the upside, right? And you'll notice in my analysis, I do tend to say confirmation entry. The reason why I say this, although I may at times enter risk entry, is because I want you guys also to effectively, you know, do your own research on it and use your own way to enter the market in order to, not to put myself in a space where I'm saying enter off of this point and, you know, I don't know how to put it, but I also want to include you in this in the analysis, if you get what I mean, right? And you can go through your own entry method over there as to see, provided that you see that price is continuing to the upside, right? And you've done that investigation, and then there you go. So yeah, these are my objectives, all right? And looking into tomorrow's trading, I'm seeing a continuation to the upside, right? But with that being said, best regards, the architect.